Opinions expressed herein are subject to change and not necessarily the opinion of the firm. Past performance is no guarantee of future results. The information presented herein is for informational purposes only and is not intended to provide personal investment advice. It is important that you consider your tolerance for risk and investment goals when making investment decisions. Investing in securities does involve risk and the potential of losing money. The material does not constitute research, investment advice, or trade recommendations.
And now introducing Mr. Keith Lanton.
Good morning. Hope everyone's feeling good and had a relaxing weekend. Obviously, unusual times and a wonderful opportunity to spend time with close family and to reconnect electronically with friends and more distant family. Hope everyone's staying healthy, practicing good habits. And there's a lot to talk about. Last week, we went past what traditionally is a milestone, April 15th, but the tax deadline postponed till July 15th this year. So, reminder, you and have extra 3 months to file taxes and pay taxes. Also, reminder that as a result of the CARES Act, that IRA distributions are not required in 2020. Does not wish to take an IRA distribution. Investor does not wish to take an IRA distribution, and they are set up for IRA distributions. Once an IRA is distributed, you cannot take it back. Also, you have until July 15th to make IRA contributions, to make Roth IRA contributions, so that extended deadline offering additional time to make those changes. I'm going to talk this morning about communicating confidently. This article is entitled "Communicating Confidently in a Crisis," but this advice certainly matters here in the middle of the pandemic. But I think it's advice that you could use regardless of the circumstances, but perhaps even more important, how we communicate when we are talking to people when they are on heightened unease. And the number one takeaway to think about when you are communicating with anyone is it's not what you say, it's how you say it. And lots of us spend lots of time figuring out what we are going to say, and we don't think about how we are saying it. And if we don't necessarily believe in what we're saying, even though we may not recognize it, that is something that is transcended in two ways: our body language, if we're in person, and our voice. 93% of all communication is nonverbal. That's what the experts say. So all those other factors having a huge impact on that communication that you're having with another. And sometimes when we communicate, we send mixed messages. For example, imagine that you're mad about something. If someone were to ask you what's wrong, I'm sure you've had this experience perhaps with kids or with the spouse, and the other person says nothing's wrong, but they did it with an angry tone. Perhaps their arms were crossed, perhaps their teeth were clenched, and that's an example of sending a mixed message. So how can someone tell which part of a mixed message is accurate? When it seems that the message we send through our body language, tone of voice, and word selection don't match, which one is perceived as most accurate? Well, it's perceived as most accurate if you're in person. It's body language 55% of the time. And if it's not in person, then 38% of the time, it's the tone. And back to that 93% is nonverbal. Only 7% of the time do people believe the words and not the body language. Again, body language is not only how your body's situated, but also the tone of voice that you're using, which comes through very clearly over the phone. So our goal should be to communicate with congruence. That is, in our words, tone of voice, and body language should all send the same message. Second tip is to communicate with confidence. Critically important when speaking in this pandemic is whether or not you are speaking with confidence, whether or not you're focused, whether or not you're paying attention to whomever you're speaking with. It's not enough that our messages are merely congruent. They also need to be confident. Let me give you some examples of confidence. If you are waiting for someone to call you, if you're a financial advisor and you're waiting for clients to call and the client initiates the phone call, that is perceived as less confident. More confident is being proactive with the communication. Less confident is winging it or scripting every word. More confident is listing bullet points, being prepared, having a few points written down, keep you on track, keep you concise. Also, speaker needs to be well rested. They need to have blocked out time for sleep and self-care, because you come across as unconfident when your voice is ragged or you sound distracted or run down. Less confident is a situation where you have clients fully focused on your words. More confident is if you can share some sort of visual as you speak with them that creates a feeling of confidence, especially if you put them a chart, something simple in front of them that's a good way of getting your point across. In order to be more confident, if you're not feeling particularly upbeat or confident, studies have shown that if you were to look at pictures of friends or family while speaking to someone in a situation that you're uncomfortable with, you will come across as more confident. Also, you will come across as more confident if you first ask the person about their family, make small talk, in other words. Diving right into business is perceived as less confidence. Saying things like, I'm sure you're scared, is less confident, as opposed to, how are you feeling about all of this? And also, try not to say things like just or maybe or I think, and have declarative statements being more positive when possible. Also, when speaking, don't tap your desk, click a pen, keep your hands quiet in front of you. And if you're in person, one of the things you can do to really make people feel less comfortable and unconfident is to look away, to appear distracted, as opposed to maintaining focus and eye contact. Speaking about confidence and clients having confidence, UBS recently did a study, and they found that when you have a plan, and this goes to knowing what to say, what you're talking about. So UBS in their study found that when clients had a plan in place, there was a 26% difference in their overall confidence in their financial advisor in times of stress than when there was no plan in place. Moving on to financial markets this morning. We are seeing futures lower this morning. Dow futures are down about 500 points. The biggest story this morning is the precipitous drop in oil, specifically the drop in West Texas Intermediate. That is the oil here in the United States. West Texas Intermediate is down a whopping 35% this morning. West Texas Intermediate down $6.15 to $12.12 a barrel. Big difference between West Texas Intermediate and Brent. Brent is down $1.60 this morning, down about 6%, but down to $26.45, one of the widest gaps, percentage-wise, probably the widest gap ever between West Texas Intermediate and Brent oil. That is happening because storage in the United States has run out reportedly to store oil in the United States. Why has it run out in the United States and not in the Brent department? Because in the United States, the majority of oil is landlocked. That's shell oil that is being extracted, and the Dakotas and Pennsylvania is landlocked. And to store it, you need to store it in facilities on land. When it comes to Brent oil, most of that oil is stored on barges or in caverns in the North Sea. So there's a lot more storage for Brent oil, and we're in a situation where oil futures are pricing oil significantly higher forward than the current price. So when the future is saying the prices are going to be higher, there is a strong incentive to extract the oil and to store it and sell it in the future and lock in that forward price and deliver it in the future. When there's nowhere left to store it, what happens is you have the situation here in the United States where the oil that you're extracting is being extracted at a very low price, and storage is not an option, so you can't sell it going forward. So you've suddenly got a situation where all this oil that's being produced has nowhere to be stored. A lot of it has been stored, so now it all floods the market at a time when there's not a lot of demand. So lots of supply, can't sell it forward, very little demand, prices plunging. something we're seeing here in the United States. This could have a very significant impact in the bond market, the high yield market, as it pertains to energy companies that develop oil here in the United States. Natural gas this morning down only 2.5 cents. Not the same dynamic, not the same economics going on. A 1.4% drop in natural gas. Other commodities, gold is up $2.50 an ounce this morning. Silver's up about 10 cents an ounce. So slight upward movement there in gold and silver. Separately, the White House is reportedly close to replenishing the small business payroll relief program with $300 billion. In addition, there's a provision in there for an additional $75 billion for hospitals, $25 billion for expanded corona testing, so a $400 billion stopgap bill being debated right now. And House Speaker Pelosi indicated that she's on board in discussions with Treasury Secretary Mnuchin. Notice that this latest round does not have any funding for state and local governments, something that they've been asking for. We'll see what, if any, impact that has on the municipal market. There is talk that separate financing could be arranged, and that this may not be the last round of monies as a result of the pandemic. Taking a look at the overseas market, the Hang Seng down slightly, about 0.2%. The Nikkei down 0.1%. Australia, energy-dependent, commodity-dependent economy, down 2.5%. Europe is down anywhere between 0.75% and 1% in the UK, and 1.3% in Germany. U.S. Futures, I mentioned the Dow down about 520 now in futures. S&P is down 56. NASDAQ futures down 92. And Russell futures down about 30. Last week we saw U.S. markets rise. S&P was up about 3%. The Dow was up about 2%. The NASDAQ was up about 6%. And interestingly, small cap stocks last week were down. Why is that? It's because most small cap stocks are very domestic, not insulated nearly as much from lots of the pandemic, and therefore they are suffering more to a greater extent than the larger cap stocks. Year to date, taking a look at the bond market, last week we saw munis up about 0.5%, the Treasury's up 0.6%. Year to date, the 10-year Treasury is up 10.5%. And year to date, munis are down 0.2%, reflecting significant rebound in municipal bonds that Brad has been talking about. And we'll see how municipals fare, given that the funding for some of these municipalities is a situation that is of concern. Other news this morning: President Trump saying that China should face consequences if it was, quote, knowingly responsible, unquote, for the coronavirus. Senator Lindsey Graham on Fox News said the U.S. should impose pandemic tariffs to punish China for coronavirus. Mr. Graham says legislation is being drafted to, quote, cancel debt owed to China. States have different reopening plans as some restrictions are being removed. We'll see how that plays out. Facebook today is aiming to introduce a gaming mobile app, according to the New York Times. Macy's in the news that they could seek rescue financing. Royal Caribbean says they are going to extend the suspension of sailings of their global fleet through June 11th. Norwegian Cruise Lines has hired Goldman Sachs to consider financing options. Wynn Resorts wants to be part of the Nevada economy plan to open in early May, followed by the Las Vegas Strip. Gilead in the news, their drug receiving lots of attention last week as being somewhat effective or effective against the coronavirus, but Gilead this morning getting downgraded by two firms, BMO, downgrading them to market perform from outperform, $79 target. Wells Fargo downgrading Gilead to equal weight from overweight, and they have a $87 price target. Barron's had a few interesting articles on a bunch of different sectors and companies, and we'll talk about those. First, I'm just going to mention some of the economic numbers that we are going to see this week. We are going to get tomorrow the National Association of Realtors existing home sales. That rate is expected to be at 5.47 million homes, a drop of 5.2%. Keep in mind that lots of home sales are already in the pipeline, so we may see more significant drops in the future as it pertains to home sales. We get lots of earnings this week. We get earnings today from IBM after the close. We've already gotten earnings from Halliburton, down about 8% this morning. Tomorrow, Coca-Cola, Philip Morris International. On Thursday, we get earnings from Eli Lilly and Intel. Southwest Airlines. Speaking of airlines, United reported earnings this morning. They lost $2.1 billion. They said they're going to seek additional assistance from the federal government. Thursday, we get the Department of Labor initial jobless claims for the week ending April 18th. Over the past month, 22 million people have applied for unemployment benefits. That's double the total for all of last year. Friday, we get earnings from American Express and Verizon, and we also get the release of durable goods orders for March on Friday. Barron's ran an article talking about the response to reopening as a result of COVID-19, saying that businesses won't snap back so easily. The urge to reopening the economy, particularly in light of the staggering number of job losses and probably a double-digit second-quarter decline in GDP, is understandable, but a rush to get back to life as normal does raise the risk of a relapse. If confidence isn't restored, consumers may refrain from spending even after the all-clear signal is given, especially because the most vulnerable older Americans are a big portion of the economy. 40% of all consumer spending is done by people age 55 and over. And Barron's discusses that about 20% or one-fifth of the American workforce is employed in 15 of the highest contact industries. High contact meaning that you have very close physical proximity to others, and these would be areas where there'd be lots of reluctance to engage in business, and that certainly includes things like flying, affecting pilots and anybody who's related to the aviation industry. But it also includes teachers who are in close proximity to students, and that spans preschool all the way to college and graduate school. It also includes any motor vehicle operators, Uber drivers, taxi drivers, barbers, hairstylists. Anybody in therapists, nurses, midwives. So the list is quite extensive of those close contact industries. Something to keep in mind when you think about reopening the economy and how many occupations resolve getting into someone's more personal space. Barron's did discuss a number of interesting stocks to think about in this time, despite the significant market rally that we've already experienced. One of the sectors Barron spoke favorably about is pharmaceuticals, suggesting that pharmaceutical companies with strong pipelines and essential drugs could be industries that represent good opportunities, given some of the sell-off in some of the pharmaceutical stocks. A couple of stocks specifically mentioned in this article include Pfizer. Speaking of Pfizer's drug programs, including their vaccine Prevnar, the cancer drug Ibrance, two of the industry's top-selling products. One analyst quoted saying that he thinks Pfizer could trade to 44. Another defensive play mentioned is Perrigo, symbol PRGO, which sells mostly over-the-counter drugs and is the dominant U.S. supplier of store-brand staples such as infant formula and electrolyte liquids. 80% of Perrigo's revenue comes from cash sales. Perrigo's CEO recently said that it supplies half of all U.S. volume in acetaminophen, that is the Tylenol equivalent, which has been in high demand to treat the pain and fever of COVID-19. So they are making all those private label acetaminophen. Customers may include companies like CVS, Walgreens, Walmart, Target, selling those products under the brand name of the stores. Perrigo also has a large private label cough syrup and asthma remedy business as well. Also mentioned in this article, AstraZeneca, symbol AZN, which has a pipeline of products that include cancer treatments. They also recently had very significant success with a phase 3 drug which showed overwhelming efficacy for lung cancer patients. Analysts here suggest that drug sales could grow from $3 billion this year to $8 billion next year. They also have a pipeline of drugs that's seeking approval to treat illnesses like lupus, anemia, and asthma for AZN. Another company mentioned in Barron's, this is a Wells Fargo analyst talking about the company that has been sort of in the doghouse, and that is Kraft Heinz, symbol KHC. Wells Fargo analysts recently raised their estimate on the stock and put a overweight weighting on it from equal weight, raised price target from 28 to 38. Suggesting that over the past 5 years, market sentiment around Kraft Heinz has swung from euphoria to despair. Now he thinks that investors can benefit from the extreme negativity. Kraft Heinz on April 6th came out with earnings. Stock did move higher. They guided higher. They said revenue came in above expectations, $6 billion versus $5.8 billion. And they also raised earnings estimates, and those earnings estimate raises reflected in the commentary from Wells Fargo. J.P. Morgan also raised their estimate on the stock, but they put an overweight on it and a $29 target, which isn't too far from where it's trading around $28 at the moment. Barron's also came up with some stay-at-home stocks that are far less pricey than perhaps the most frequently cited stay-at-home stock, which is Zoom. So some other stocks to think about, suggesting that Zoom trading at 45 times this year's estimated sales may be an absurdly expensive stock, but perhaps other stocks that benefit from the stay-at-home trend could be beneficiaries. I'll mention a couple. Akamai, symbol AKAM, which is up 22% this year, but trades at a modest 6 times revenue when compared to the 45 times at Zoom. Akamai, what they do is they help direct traffic around the web in order to move traffic to in order to speed up transmission, and they have some of the largest internet players as their customers to help them efficiently move traffic around the web. So the more people are at home, the more different locations, the more in need are Akamai's services. Also mentioned in this article are document storage companies, which have largely been ignored, they say, in the scramble for work-at-home plays. They mentioned 2, Box, BOX, and Dropbox, DBX, which both trade for about 3 times revenue. And finally, they mention some of the voice-over internet phone companies. They mentioned 8x8, which we at Lanton use, and has been a big help in this time with people working at home. As many of you at Lanton know, this enables us to be able to communicate as if people at home were in the office. So 8x8, their competitor RingCentral, RNG, also mentioned as beneficiaries to the stay at home and work at home trend. One stock that was mentioned positively in Barron's, and it is up this morning, so be careful, is Compass Diversified Holdings, CODI. This is a small cap stock, and they do use debt as part of their business model, so it had come under pressure. And what this company is a middle market private equity firm. But Barron's citing the savviness of management, the companies that they own, like Sterno Group, which makes candles for warming tools for the food service industry. One of their other big holdings is 511 Tactical, which is a provider of equipment and uniforms used by police, firefighters, emergency responders. And the article goes on to compliment their diverse ownership. Goes on to suggest that the diversification doesn't insulate Compass from physical distancing disruptions or lost demand during the recession, but it does help. They said that Compass has been early in cutting discretionary spending and capital expenditures. They've made some savvy acquisitions. They just bought Marucci Sports, which is a manufacturer of baseball bats and other gear, for $200 million in cash, suggesting they're taking advantage of some of the need to sell and lack of bidding from some customers. And then they said that Compass was extremely either lucky or smart. At the end of 2019, they sold two of their larger holdings, Manitoba Harvest, which is a hemp producer, and they sold a recycling and waste disposal firm, Clean Health, for a combined $770 million. They had a $311 million gain on that. They sold those two companies, and at the same time, they raised $111 million in November from the sale of preferred shares, which they used to pay off debt, and their debt leverage ratio is now down to 1.4 times net debt to EBITDA, which is probably the lowest in their industry, and as a result, Moody's and S&P each upgraded Compass's remaining debt, further lowering their cost of capital. For the past 9 years, Compass has paid a quarterly distribution of 36 cents per share, which, based on the closing price on Friday, which is not the price as of this moment, gave the stock a 9.24% dividend yield. The 12-month range, stock had gone as low as 11. I believe now it's trading around 18 this morning. The 52-week high is 26. And Barron's, at least before the rally this morning, was suggesting that the sell-off was overdone. The symbol there is CODI. Going to turn it over to Brad. Good morning, Brad.
Hey, Keith. Good morning, everyone. Hope everyone had a great weekend. So just a couple things. We've had a big rally off the lows in munis. Last week I said that munis have been trading more like equities than municipals, but the drastic moves have stopped. I don't like quantifying returns on munis unless you are in some sort of very simple high-grade fund. When Keith mentions that munis are up X percent or down X percent, obviously all of you know if you're trying to get a bid on a lower-grade municipal bond or a municipal bond that is facing some financial trouble, that the bids are just not there. So with that being said, here's what we need to keep an eye on for the next few weeks. One, states need funding. There's no question about it. If the the beginning will be that states, large cities, and large counties will get the funding. So that is the area that you want to play in most likely. And then we need to see if the government's going to go further beyond that. Two, we need to keep an eye on the credits. I don't like two-level downgrades. If a bond is downgraded from AA2 to AA3 or put on negative credit watch, you want to see what the outlook is, and you want to make sure you're not getting in a bond that's going to be downgraded from AA2 to a BAA or possibly even lower. So you really, and I'll help to the best that I can. I know Keith and Keith will too. We'll keep an eye on those credits. Municipals that had trouble beforehand, Puerto Rico, Illinois, New Jersey Trans, MTA, these were financially strapped beforehand. I don't know how much the government's going to step in. This is just my opinion. I don't know how much the government is going to step in for municipalities and projects that have mismanaged their funds initially, although they did it in corporates. So who the heck knows? Anything goes. But it's just something to think about. So I'm going to say that we should stick with what we all think is quality. We have to use our common sense. I haven't been a fan of insured bonds for years, but at this point, the insurance is so cheap. If you have a bond that has an insurance wrap on it, whether it's BAM or AGM or MAC, you may as well take it. You have nothing to lose and possibly something to gain. I still only want to buy bonds with insurance if there's a reasonable underlying credit. So none of us know how this is all going to play out, but again, all I can say is don't be stubborn about positions that you own or what it is that you want to do. I've gotten more trouble personally being stubborn and not going with a trend than anyone could imagine. So we also don't know what the long-term repercussions of everything we're doing and all the money the government's spending right now and how that's going to affect us down the road. And I'm sure that we all think about it, but it's something that we can't control. So we really have to think, what are we doing for the next week, month, year? Beyond that, no one knows what's really going to happen. So just common sense, stay the course of quality, and I hope everyone has a great week. Thanks.
Thanks, Brad. That's everything I've got.
Thank you for listening to Mr. Keith Lanton. For more podcasts, please visit our website, www.lanternwa.com.